Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Stocks in Asia open higher even as reciprocal tariff deadline nears.
He wants to break us so America can own us.
First in 7 months that we've had 5 days up.
With the election of Donald Trump, is that the world is not going left or right, but America is turning inward.
23,490. So, but yeah, 23,500 almost there on the board.
The fundamental concerns still remain.
A spread between two expiries. What it should be, how it should be, are nuances.
In John 1 tariff, that will be applicable to all CGD all across country.
266 points up on the Nifty. The Sensex now inching towards a 900-point gain.
In a hurry to fold up. A set of people who definitely want to sell out are the exporters.
Advance decline ratio very, very strong. Like you mentioned, a 3:1 in favor of the advances.
Good afternoon and welcome to the last hour of trade this Monday. And what a Monday it has been. The bulls continue to be in absolute control of this market. That momentum that we saw last week, it's only gotten stronger. And now levels are being taken on the upside, like they were being crashed on the... yeah, exactly. It's the exact reversal of the downside momentum that this market was in the grip of for the last couple of months. But it's a good-looking screen, guys, this afternoon.
Well, that's right. And things have turned around, right? In 2025, now the Nifty is positive. You know, we went down to around the 22,000 odd mark. We have bounced up close to around 1,700 points from there. The only question is, can the mid and the small caps as well, which the index itself is down 8 to 10%, can that move into the green year to date? That will make portfolios look very, very good. So it doesn't take away from the fact that today the index is looking good. The Nifty Bank has gone ahead and taken the 200 EMA as well.
Yes.
So it's a good looking screen.
Indeed, 23,700 was crossed today on an intraday basis. YTD positive. In the last 6 trading sessions, the Nifty has gained in excess of 1,300 points. And since last week, that's the last 6 days from when we've had that winning streak, the Nifty has gained close to about 6% The mid-cap index is up nearly 10%. The small-cap index is up 10.5% to 11%. That's the extent of the vertical run over the last 6 trading sessions. The Nifty has crossed a 100-day moving average today. The Nifty Bank has surpassed the 200-day moving average. And it's good to see both banks and IT outperform yet again. In banks, it's Kotak Mahindra Bank, top honors. Axis Bank is higher in trade across the board, actually. Even in HDFC and ICICI Bank is performing. But even IT was the laggard last week, but it's coming back into form. CLSA is saying that perhaps all the uncertainty, pessimism is already priced in. And the Nifty IT index has also moved to the day's high. And you've got names like Tech Mahindra, Wipro, HCL Tech all surging in trade.
Yeah, absolutely. I mean, you can't complain with this market because of the width, the breadth, the depth of the kind of move that we've had. And it's not a flash in the pan because this is pretty much what the story was for the better part of last week as well. On the mid-caps, I mean, just some examples. PSUs, that's a theme that's continuing from last week. And there's some serious buying. Last week also, the CPSE index and the PSU index, they were among the best performing parts of the market. And that's continuing today. A lot of names on the railway side, for instance, IRDA, IRDA, look at that stock, 10.5% on the higher side. So it's been looking good. Stocks like RailTel as well. So railways is a theme. Aircon, that's definitely coming back. But even non-PSU mid-caps. Some of the auto ancillary plays are very, very interesting today, by the way. Look at something like JBM Auto. A couple of other stocks, Electra, Green Tech, 7.5% up. So there's plenty of stock picking that's going on. And I guess many stocks that are finally recoiling from extremely beaten down levels.
Well, that's right. Now, just a few stocks that were not participating earlier as well. You have Apollo Tyres. Just pull up the intraday chart out there. The stock from the red train has moved into the green. Aarti Industries, another one that had pulled back a goodish bit when we were seeing a correction. That one as well has spiked up. So quite a few of these names have now started participating, as the broader markets look strong. So some of these names actually early in the morning, they were underperforming, but they have pulled back as well. Even Nippon Life, I think we should pull that one up. Nippon Life India, that stock has moved to the high point of the day with a gain of close to around 5.5% or thereabouts. That said, let's get in Mitesh Thakkar back with us on the show. Hi, Mitesh. Good afternoon and good to speak to you after a while, Mitesh. Well, markets are rocking. From 22,000 odd, we're at around 23,700. And now, importantly, we're taking out crucial levels, both on the Nifty and the Nifty Bank. One would hope that the tech index as well, that's actually been an underperformer year to date, that as well participates. Your view on the Nifty first. Where are we headed?
So, Nigel, I think, we've been calling for a rally to 23,500, 600. That level, I thought, will be a mild supply zone. That's been cleared very easily. And then we revised our target to 23,750, 24,000. I think we are well on our way. The Bank Nifty also has cleared 51,500 without any kind of a break. We were sitting on a 6-7 day kind of rally, and we were running into a pivot point, and that's been cleared. The Bank Nifty next level is around 52,010, or rather 52,000. That's being the round number. So I think we still have more upsides left. But what is important is that the way the daily indicators and the weekly indicators have been pulled up with this kind of momentum, even if we get a pullback or a decline, I think the market will get into a sequence of higher highs and higher lows. So I think in that sense, it's a very positive setup, and I would expect more upsides to come in the next few days. On the stock side, I have a buy on Concor with a stop at about 698. Look for a target of around 740 here to begin with. Eventually, higher levels can be looked at. And the other one which I like is REC, which I would recommend buying with a stop at about 436 for targets of 460.
Got that. Let's talk about the sector of the day, and that's some of the oil and gas names. So natural gas stocks are surging following industry recommendations to the regulator, PNGRB, that could imply higher tariffs for some of these companies. Sudarshan is now joining in with the details.
So PNGRB, that is the natural gas regulator, has proposed certain changes to natural gas tariff regulations 2008, and also it has sought comments from key players, and those comments have to come by April 11. So I've taken out certain major changes that PNGRB has proposed. First one is price of gas for fuel requirement that is used for the computation of tariff. Now GAIL has been asking that computation has to be done on contracted prices. Now PNGRB has proposed that change, so it's positive for GAIL. Second change is related to the older gas pipelines. Now for the older gas pipelines, volume assumption that once the volumes cross that limit, and that limit in the earlier regulation was in the range of 80 to 88%. So if any company used to cross that 80 to 8%, then only they could have got certain part of the incremental revenue. Now PNGRB has proposed that limit of 80 to 88% will be brought down to 75%, which is key positive for GSPL, also to GAIL to certain extent. Third is for city gas companies. Currently, we have 3 zones, Tariff 1, Tariff 2 and Tariff 3 zones, that is basically used to quantify the tariffs for these companies source the gas. Now, these city gas companies have been proposing that the number of zones should be brought down to 2. Now, PNGRB has proposed that change too, and this is positive for city gas company, especially Mahanagar Gas Limited. Now, brokerages also have written, City says, tariff computation on the basis of contracted prices will be positive for GAIL. Second, reduction in volume threshold to 75% will benefit GSPL. CLSA says IGL and for MGL, operational expenditure will come down if these changes are implemented. Also, there can be a tariff increase for GSPL and GAIL, and gas cost can increase for industrial customers of Gujarat Gas. So that can be minor negative for Gujarat Gas. Now coming to NTPC, because Macquarie has come out with a note today, and it has maintained outperform call and target is rupees 475. That implies an upside of more than 30% from current levels. Macquarie says it's a compelling play on India's power demand potential, and the pickup in power demand continues to bode well for the company, but there is further clarity which will be needed, and that long-term driver Macquarie is expecting that might come over next 6 months. On the back of this, you are seeing a big move in city gas company. Also, NTPC is higher on the positive brokerage note.
Okay, all right. Sir, thanks a lot for explaining that to us. Well, earlier today, we also spoke to Mr. Gajendra Singh, a member of PNGRB, who commented on the benefits the gas companies will receive. Let's listen in to what he had to tell us.
The entity which is far-flung area may be paying a Zone 3 tariff, which was very high, 105 plus, and the Zone 2 tariff is 85 plus. So all those entities, now they will get benefited. They will get basically the Zone 1 tariff. And the 3 John now get converted into 2 Johns. So the focus is that how we can increase the gas usage all across country, because the focus is for CNG and PNG. CNG and PNG, they will get benefit. Few entities or the few pipelines where it is flowing more than 75%. There we are seeing is whatever the excess volume will be there beyond 75%, the benefit will be passed on 50% to the entity, 50% to the consumers. And only another thing is the isolated field. There are the number of isolated fields where there the tariff was basically, now these are the old fields, and what we are seeing, the pipeline which were laid there in those areas, they are not getting any returns on that. Somewhere the tariff is almost nil or maybe in a negative. So there we are seeing that at least they should recover their operating costs.
All right, so that was the PNGRB itself talking about what this new policy could perhaps look like. We have Deepan Mehta joining in from Elixir Equities. Deepan, great to have you with us this afternoon as always. So let's start off with exactly this excitement in gas stocks, because it seems that if this new proposal goes through, whatever they're discussing right now, it's not final, but it seems that it could be at least slightly beneficial to stocks like GAIL and maybe a GSPL, maybe even IGL, as the member explained. Any thoughts over here? Do you like any of these gas stocks?
Yeah, good afternoon, Subhi, and thank you for having me on your show. See, generally we've avoided these companies because there's excessive government interference. And now on the transportation side, what is happening is that more and more it is clear that EVs are going to play a central role across India and rest of the world. So from that point of view, also there could be some demand constraints. And also the fact that a lot of the public transportation, especially in metros, the buses and all are going.
Oops, I think we've just lost that line with Deepan. We'll try and get him back. Deepan, sorry, we lost you there. You're talking about how EVs will be a larger sort of thematic threat to perhaps gas demand.
Yeah, that's right. So that was my simple understanding that overall gas demand projections are maybe on the higher side. And secondly, don't really prefer to invest in an industry where there's so much of government interference, and government policies can make such a huge difference in terms of tariff distribution. But there's no doubt that these stocks are extremely cheap. They've underperformed, and there could be a trading rally in these stocks on any positive news flow. So from a trader's perspective, it makes sense. But from an investor's perspective, with a 2-3 year outlook, I wouldn't go in for these gas stocks.
Kotak Mahindra Bank, what a move, Deepan. Afternoon, it's seen 4.5%. The low around the time of the IT ban was about 1642. From that level, it's seen a gain of more than about 30%. What's happening in Kotak Mahindra Bank, and do you think there is more upside?
Yeah, I think, Rima, that across the board, people are looking at banks very closely. And banks like Kotak Mahindra and HDFC Bank were not only impacted by over-ownership, but also a lot of FI selling, considering a high proportion of FI holding is there in these companies. And if you notice, the FI figures have turned positive. So I think I just feel that some amount of money is coming back into these two banks. And looking at the fact that there could be some interest rate reduction, improvement in liquidity in the system. Both HDFC, Axis Bank, ICICI, Kotak, the 4 large private banks, are definitely just about recovering lost ground, getting about some amount of outperformance, which they so deserve as well. So you could always justify buying these companies, but really our preference in the entire lending space is more towards the NBFCs, where growth rates are higher and valuations are still lower. And some additional benefits have come to NBFC in terms of lower risk weightages. So the likes of Bajaj Finance, L&T Finance, Cholamandalam, I think those are preferred over these 4 large private banks. But nonetheless, I think all the prospects are very good, and investors should be overweight the banking and the NBFC sector.
Okay. All right. Got that. Deepan, stay on. We'll have more questions for you in just a bit. And as we welcome in Yatin from our sister network Awaaz, let's put up SML Isuzu. The stock's up about 6%. That's not the story. The stock in this month itself is up 65%. I mean, what a move in a tough 2025 so far for the market. This stock is actually up 24-25%. Like I said, a lot of the price action has happened in the last 3-4 weeks itself. Let's put up maybe a month to date if we can, or even a year to date chart for SML Isuzu. it'll kind of explain the excitement that I'm referring to. So what could the buzz be? There we go. Look at that. 1 month, 52%. That's the stock for you today. Now, what could the buzz be? And this is what Yatin is picking up. Sources at CNBC are saying that M&M could be in talks to buy the entire promoter stake. Yatin, no wonder so much of buzz around the stock. What are you learning?
Absolutely, and earlier also, there have been reports which suggested that Sumitomo, which is holding about 44% promoter stake in SML Isuzu, wants to publicly exit, smaller businesses as well as businesses with lower profit margin. Now, what we are gathering from sources is that M&M has initiated talks with the promoters of SML Isuzu to buy an entire 44% stake. This is in sync with the strategy to probably expand the trucks and buses business. In the small commercial vehicles, we have seen that they have garnered nearly 51% market share, but the trucks and buses business continues to remain a smaller business. With focus more on the trucks and buses business, the board of M&M is likely to meet this week to make a decision whether or not to look at buying that 44% stake from the parent company of SML Isuzu. Obviously, when we contacted Mahindra & Mahindra, they said that as of now, this story is speculative and they would not like to comment on that. SML Isuzu's comments are awaited. But what we also gather is that Mahindra & Mahindra is looking at a valuation of 1,800 to 2,000 crores when it comes to SML Isuzu's acquisition versus the current market capitalization of close to 2,400 crores. But would be interesting space to watch out for, because earlier also we have seen SML's promoters looking at an exit. Whether or not this time M&M could make an offer which could be accepted by the Japanese counterpart is something that we'll be tracking closely.
Okay, all right. Thanks a lot for that. Yatin will keep an eye out on that particular story. Well, Deepan, what do you make of this particular deal? Deal in the works. Hopefully it gets closer this time around. But how do you see, what's the outlook on both those two stocks?
I mean, imagine how can I comment? If it goes through, then we'll understand the whole implication of this thing. But I don't know. I wouldn't want to comment on this thing. And frankly, I'm not following SML Isuzu also that closely. But
what about for Mahindra?
It's very positive. M&M view is very positive. And I think the correction is a good opportunity. They have become the second largest passenger vehicle manufacturer. And the kind of response to their models is very impressive. And amongst the few Indian companies which have a very coherent EV strategy. So from many angles, a preferred pick within the auto sector is M&M.
Okay. All right. Deepan, if I'm not mistaken, I think you like APL Apollo Tubes from that space, if I remember correctly. JTL is another stock that's now at the high point of the day. They have deployed the DFT, which is direct forming technology. And they are saying that their total VAP will move up to around 50% of the mix. And with this particular capacity enhancement, they'll move to close to around 1 million tons, 9.4 lakh tons approximately. From the pack, do you continue to prefer APL Apollo Tubes, though that is relatively more expensive, or are there other companies that you would like, say a High-Tech, a JTL? Would you look at them?
See, Nigel, first of all, the disclosure, we are invested in APL Apollo, so views could be biased. But this is one company, which has clearly have a differentiated product model. And they are using a lot of impressive brand ambassadors to sell their products. And they are slowly converting a segment which was more commodity into a product type of segment. And with the way the architectural trends are taking place and the modern buildings which are coming in, modern structures, I think there's great demand for very high value-added products coming in through from APL. And last quarter numbers also were pretty decent after a bit of a lull. I know the stock is expensive, but they have very good headroom for growth. And maybe at corrections, you could look at buying into this company, but it's a company which existing investors should definitely remain invested and not get too perturbed about very high P multiples, because the underlying growth rate is pretty decent.
Got that. Let's talk about L&T. That's a big mover today. In fact, so many of the large caps are higher. Reliance Industries is a big contributor on the way up. And you've also got L&T. Now, reports suggest that L&T is the likely winner for a $4.5 billion project coming out of Qatar. Vivek is here with the details.
Well, that's right. So L&T is in focus. Remember, earlier today we had indicated about how some of the reports as far as the Middle East infrastructure journals were concerned had actually mentioned that L&T had emerged as the likely winning bidder as far as a very large project from Qatar Energy is concerned. The total value of this particular project is in the range of $4 to $4.5 billion. So it could be one of the largest order wins that L&T could witness if in case the entire order does come into L&T. Remember, Qatar Energy is currently going ahead and increasing its LNG capacity from 70 MT per year to almost 126 MT per year. And this particular bid was for a project for expansion of the North Field South Expansion Project, is what Qatar Energy deems this particular project as. We reached out to the management of L&T. They did not offer us any comments at this point of time. But there are a couple of things that we need to watch out for. Number one, most likely it is possible that L&T will have to go ahead and book this particular order within FY25 itself. What we need to watch out for is the total scope of the work that L&T has, and in case this particular project, the EPCI works that L&T has won the bid for, whether it is split into and given to multiple entities. At this point of time, the report does not indicate that. The report indicates that L&T is the sole bidder that has won this particular project. In fact, just a while ago, Morgan Stanley too has reacted to this particular development. Morgan Stanley says that the size of the contract is valued between $4 to $5 billion. With this, the core order inflow for Q4 has reached over 66,500 crore. FY25 order inflow is now at $2.8 trillion, which indicates that it's an 18% year-on-year growth as far as core order inflow is concerned for L&T, which will significantly exceed the management's own guidance of just 10% order inflow growth. It's an important development, and we need to wait and watch by when L&T informs the exchanges.
Thank you very much for that. Dipan, you've largely had a preference for large caps over mid-cap and small caps, but we've seen a pretty fantastic recovery over the last couple of trading sessions. First, give us your view on the markets on the whole, what we've seen, and L&T in particular.
See, now I think the markets have run up a lot and you could expect a correction, but more importantly for investors who are having a longer term view, I think if the higher top, higher bottom pattern is established, and it'll give confidence that the worst is over. And also we need to get it followed up with good March quarter numbers and some amount of sanity when it comes to Trump tariffs. So broadly, I think unless there is some additional bad news, the markets from a decent bottom and from here on, it will build on this particular foundation. L&T in particular, first the disclosure we and our clients are invested. It's a kind of a must-own stock and like part of your core holdings, the top 4-5 holdings. And that's purely because of the kind of order book position it has got and the excellent way in which they have diversified their revenues, not only in India, but also overseas as well. And that gives great earning visibility. There's gradual value being built in the subsidiaries as well. But even if you don't consider the value of the subsidiaries, the existing core EPC business has got great prospects. And with capex cycle improving, government expenditure picking up, and globally, I think more and more opportunities for L&T. All these things put together, risk-return profile, I think L&T certainly is one of our top picks within the EPC space, where there are very few choices which have got good corporate governance and great track record, I would say.
Okay, all right, Deepan, we'll leave it on that note for today. Thank you very much for joining in. Good to get the perspective as always. We do have to take a very quick break, and as we take that break, here's some good news for our viewers. India's business news leader is now just a click away, introducing the CNBC-TV18 all-new app. You can get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app from the Apple Store or from Google Play. You can also, of course, scan the QR code on your screen. Welcome back. You're with us on Closing Bell, and it continues to be a solid afternoon of trade. I was just doing the math from the lows, and the Nifty's rebound very smartly, about 7.7, I mean, nearing 8% of rebound from the lowest levels that were hit just a couple of weeks back. So it's been good going with the bulls making a comeback. Rajesh Bhatia, CIO at ITI Mutual Fund, is with us now for some perspective. Rajesh, great to have you on. So it's, it's good times all over again, one would imagine, one would hope. But are you in the camp that also feels that the worst of this correction is indeed over?
Well, we'll have to see about that. I think, we should enjoy this bounce and we should not underestimate the extent of the bounce that can happen. But I think from a fundamental perspective, we are still in a slowing economy or a slower growing economy. And that challenge definitely remains. And the second challenge which remains is the uncertainty that has been brought about by the global macro factors. The US is probably trying to engineer a slowdown for their own reasons, but we should not underestimate the impact that can have on global growth, including that of India. So we are already in a slowdown, and if the US also slows down, which they probably want to, then my sense is that can become a bit of a fundamental challenge. And listen, basically we do require top-line growth, translating GDP growth, because given where margins are for the Indian corporate sector, we should not bet on a greater expansion of margins. So to get earnings trajectory, we do need top-line growth, which is we do need GDP growth. And that's really what is necessary for the markets to firmly decide that we are on the right track and that a bottom has been made to answer that question.
So it's too early to say a bottom has been made as of now, to your mind. You're not convinced. What about, how would you construct your portfolio in such a scenario now?
Look, what has happened is all inflection points in the market are drawn really by macro factors. And the trigger for the market rise from the bottom has been that the US dollar has retreated and the US 10-year treasury yields have retreated. There is some fear of a slowdown in America. There is a thesis that probably the government itself wants a bit of a slowdown to refinance some part of the fiscal deficit or the spot that they are in. If that be the case, that has led to this rally. I would say that why I'm saying that you should not underestimate this is because those factors are not going to change in a hurry. And the FIs that have come in probably could persist for much longer. So as far as I'm concerned, I'm enjoying this rally. And I've used this opportunity to buy sectors where I think there is strength. So last time also I pointed out utilities, power utilities are the ones where we have added money. We had added money in the private banks sector. I've also used this opportunity to buy digital commerce companies such as digital insurance brokers or payment companies or electronic manufacturing services companies which are leading the space, etc. They may well become trades, I don't know. But as far as I'm concerned, I can see that this is a strong rally and I should participate in it.
Okay. Hi, Rajesh. Good afternoon. Good to see you. Ben, couple of questions here. You're enjoying the rally. I love the sound of that, right? All of us are. Portfolios are feeling better. Your SIPs, mutual fund holdings, everything is looking good. So that's good. Tell us, what was the cash levels you were sitting on, say, a couple of months or so ago? And how much of that have you deployed at current reckoning? What is your cash in books? And, utilities is something that you've mentioned in the past as well. But which sector do you believe has run its course? And you would be a little bit, skeptical on that particular sector. So 2-point question.
So, I run a balanced advantage fund and, at the peak, we had more than 65% exposure to equities. We had brought it down to as low as 35, 37%. We are now back to 60+% or 60% as far as the balanced advantage fund equity allocation is concerned. So that's to answer your first question, where we do tactical allocation. The second question, where are we seeing weaknesses? Consumer is still weak, auto is still weak, consumer electronics is still weak. IT has probably given some bottoming out because IT stocks have corrected 25% or more. But I guess, they are at now attractive valuations. But those are some of the sectors that I think are weak. One other non-consensus weakness that I see probably can be capital goods. because I think the leadership of the market probably could change. And capital goods were the leaders of the last cycle. It's possible that I think that capital goods may not do as well in this cycle as you move forward.
Okay, all right. Rajesh, just one more question on tech. That, as you said, has been a relative underperformer, but now valuations are looking pretty okay. And I think CLSA as well pointed out earlier today that most of the bad news appears to be in the price post the recent underperformance. I think my director as well will pull up the Nifty and say the tech index, and we'll see that tech has underperformed just in this year. From the tech basket, Infosys is something that you like. Besides that, what do you like? Would you prefer the large cap names or the mid cap names?
So, I mean, I would definitely prefer the large cap names because I think the large cap names all have yields of about 4+%, and they've come to about 20, 21 times 27 earnings. I think that's, fairly reasonable in terms of prices. Some of the mid caps are still very expensive. Some companies which are in the middle, they are larger capitalization companies, but actually growing at mid cap rates. I would say that those have become attractive as well. Those stocks have corrected by over 30-35%. So that's another category in the IT space that I think we have bought and which we like.
So IT, you're getting a little optimistic on it. That's an interesting call. I just want to, Rajesh, go back to that point that you made on some of the consumer technology companies, I think, right? That's a space that you're looking at. But can you sort of dive a little deeper? Lots of different companies from, beauty and personal care to, of course, food delivery, e-commerce, etc., and also some fintech players which are listed. So what part of it are you most convinced on? Because, for instance, in quick commerce, there's still a lot of cash burn. Companies are still in investment mode.
Yeah. So the fintech part of it, sorry to answer your question. The fintech part of it is where I am where I've added more recently to my exposure.
Okay. All right. So tech you like, some of the consumer tech names you like. Overall on consumer, Rajesh, what's the sense? The seasonal sort of flavors do come in AC stocks right now, etc. But beyond that, on consumption, Titan, of course, there's been a note doing the rounds today talking about perhaps weakness because gold prices have shot through the roof. What's your overall sense on consumer and what's the advice?
No, so among the sectors that we like, just to reiterate, are private banks, NBFCs, utilities, life insurance companies, telecom. There's enough strength in all of these sectors, and we continue to like them. As you pointed out, we think IT is probably at closer to bottom valuations, and digital commerce companies, particularly in the fintech space. Those are some of the areas that I think at least I'm excited about. As far as consumption is concerned, I'm not really seeing any reason to kind of dive in and become aggressive. So staples, I would say automobiles, none of these, and as you point out, some of the other companies are also pointing out that the demand traction is not very attractive. So, I don't have to be in these spaces, so I'm avoiding some of these spaces for now, and my sense is that there's enough on the other playground to kind of play and to make money, and there's greater predictability, there's greater visibility. That is what I look for. Where can I predict strength in earnings, and that's really where I want to be.
Thank you, Rajesh, for joining us in the conversation today. But confidence is truly coming back in the markets. Look at the way some of these PSUs have rallied. BEL up 22% in the month of March, BPCL 18%, NTPC 17.5%, Power Grid up close to about 16%. So it's been a fairly convincing recovery over the last couple of days. Mount 78,000 scaled on the Sensex. The Nifty's hit that 23,700. From there, it's retraced a bit. So the Nifty is now down to levels of 23,633. So from the high, we've fallen close to about 100 odd points from the top from this session high. But it's still a very, very convincing up move that you can see. Expiry this week on Thursday. We'll slip into a break. On the other side, we'll get you a check on what dealing rooms are saying in our favorite segment, D Street Chatter. We'll also get you a few BTST calls.
Welcome back. Well, let's get in, Mitesh. As Rima said before we went into that break, the markets have come off a smidge from the top. Mitesh Thakkar is back with us. Mitesh, you'll continue to hold on to your longs, and also, what are the fresh trades you got for us?
I would, Nigel, but I think, as I said, you would want to trail the stop losses now really close, because you're also slightly overbought on the hourly charts, and you're also hitting some pivot levels, So on the Nifty, my advice is to trail the stop loss about 23,570 on this spot, which is roughly about 70 odd points lower from the current market price. And let's see that, if this move is really strong enough to even run beyond that. But for the timing, I think that's the trading level. On the stock side, I have a BTST on RBL Bank with a stop at about 172.5 for targets of 178. And the other one which I like is, stock which is making a fresh high is Jumble Fertilizers, which I would recommend a BTST with a stop at 614 for targets of 630.
Thank you very much for that. Let's find out how happy dealing rooms are feeling. It's been a good run over the last 6 days. Nimesh is now with us with D Street Chatter. Nimesh.
Hi, Rima. So it's a very strong day, strong momentum in land. It's largely backed by FI buying, as also aggressively short covering. So that's the key reason why even after a big rally last week, we're seeing that momentum continue, and it's largely for the bulls to start with in the news in this particular week. I guess what's happening to now is that it's getting broad-based as well. So a lot of sectors are participating on the upside. From a flow perspective, metals, banking, and IT. These are the three sectors which are well bid by larger institutions today. So there is clearly broad-based happening in terms of sector participation as well. A word on Nifty Bank, that's been a big gainer today, up 2%. And for a change, this is led by private bank stocks. It was only to select private banks. Now it's getting spread to small private banks as well. So a lot of private bank stocks are buzzing in trade. The likes of Kotak Bank, RBL, all are doing good. And there is a bit of buying flow as well from larger institutions. The broader market breadth has also been quite strong for the last many days. The mid-cap index is up another 2%. And a lot of cash stocks are now seeing a bit of catch-up. So the sense is, while this momentum on Nifty will continue until the expiry this week, but now you probably can see a bit of, a pullback into the cash stocks as well. That's the broad sense from a dealing room perspective. Even technically, we are above the crucial resistance level. So maybe till the expiry, this momentum is likely to continue, and you might see further short covering in large cap names.
Okay, all right, got that, Nimesh. What about individual stocks? What's on your radar?
So the first on my list today is IEX. That's been buzzing in trade on back of very strong buy flows. Of course, it's a strong power demand play. But for IEX, the most important trigger is the market coupling, and that is what Street is sensing that it may come very soon. Some clarity is likely, and that's the reason why we're seeing a bit of buzz in IEX today. The second stock, a couple of PSU names, Power Grid and NTPC, both stands out on back of very strong buy flow. So I've been saying for the last many days that there is buying interest in PSUs, and these two stocks stands out in terms of delivery-based buying today. On the flip side, the third name is Shriram Finance. Within a financial name, this is the only stock where there is aggressive selling today. Maybe it could be a one-day factor, but there is very, very strong sell flow from larger FIs in Shriram Finance in today's market. And the last is HDFC AMC. Again, while the stock is corrected sharply from the recent highs, a bit of pullback is visible. There is buying interest as well. And I understand a leading long-only fund has turned active buyer in HDFC AMC of late.
Thank you very much for that. Power demand has been very strong. It was strong in the month of February and even in March. That's what the demand trends seem to be indicating with the soaring temperatures. Some other mid-caps which catch your attention because they're moving up on very large volumes. You've got JBM Auto 16% up, Finolex Cable 11% higher. Remember last week it got hit when Adani announced its entry into cables and wires. It's rebounded sharply, good volumes. IREDA, MRPL, RailTel 5.5% higher. And then so many banks, as Nimesh was pointing out, it's broadening out across the banks. You've got a Federal Bank, Canara Bank, RBL Bank, Union Bank, all showing gains between 4 to 5%.
Well, that's right. Well, let's focus on BSE then. The stock is a little under pressure in today's trading session. I chatted with the MD and CEO of BSE, Mr. Ramamurthy, earlier today. I just want to bring you the broad, takeaways that I got from that conversation. What he said was BSE will not run behind market share in the derivatives segment, given the change in expiry dates that we have seen. With regard to that, I asked him, are you going to go ahead and are you going to change the expiry date for BSE contracts? He said that they're currently evaluating and all the announcements changes, and they'll come up with a reaction in the due course of time, if at all. So that was the other clarification that they did come up with. On the total turnover coming down, they said the notional turnover has come down by around 40%. That's across exchanges. And the premiums have declined by close to around 17% across exchanges. However, they said that the notional F&O volume for the BSE is down by only around 17%, and the premiums for them are more or less stable. So across exchanges, it's down more, while for them, they believe that it's down by only around 17% and premiums are more or less stable. On the cash market volumes, they say, in fact, it's gone up a little bit, and they'd spoken about this earlier, that some movement from the derivative volumes could be moving to the cash market. They're saying that's happening, and their market share is hovering around that 7% odd mark. Well, on that note, let's listen in to the man himself, Mr. Ramamurthy, and what he had to say earlier today. What's the probability of you changing the expiry day? Is it high, going by what you have got back in terms of a feedback? Point number one. Point number two is, by when will you respond to this? If there is a change, it appears that for April, there may not be a change. You can correct me if I'm wrong on that. By when do we hear a response from the BSE?
See, I would like to reiterate that BSE's expiry was next to NSE's expiry of Nifty and Bank Nifty for a significantly long time when it was relaunched, notwithstanding that Sensex was trying to find a feet. But only thing what it was not able to achieve is proper economic significance of itself. So whether in the revised situation when BSE Sensex is establishing itself as a clearly important product, what should be the action should be carefully thought about. It cannot be defined in terms of time horizon. It has to be talked about in terms of the entire realignment.
Indeed. But there's a probability you'll look at changing it.
No probability can be ever ruled out. Only ascribing a percentage high or low will be very difficult at this point. The market feedback that we received from people whom we approached and people who approached us, the point that underlines is that there should be a spread between two expiries. What it should be, how it should be are nuances. We need to see how the market spans out in respect of all this. Since we are having too many other realignments already happening, anything done in a hurry will not help in the product development and economic development. So at this point of time, we are assimilating all the announcements, changes, and we will come out with a stand, what will be useful for the product.
That's Bombay Stock Exchange. But let's talk about IT. It's been a good day for the IT stocks. The Nifty IT index is up close to about 2%. CLSA says the uncertainty is priced in. The Nifty IT index is down nearly 15% this quarter, underperforming the Nifty, which is now, on a year-to-date basis, it's flattened out completely. It's erased its losses. But IT has, clocked in considerable underperformance. And according to them, a lot more pessimism is built into the current valuations than the potential earnings cut. They do acknowledge that the macro is uncertain, so there will be postponement of discretionary demand by 1 or 2 quarters, particularly in sectors like manufacturing, retail, which could feel the pain of the tariff war and the tariff disruption. They've lowered the revenue growth forecast for the IT companies for FY26 by 3 to 4%, but the bottom line impact may be limited because of rupee depreciation. That said, even if discretionary demand is not coming back in a hurry, there will be a lot of cost optimization deals, large deals, where Indian IT companies could fare well. HCL Tech, CLSA has upgraded it to an outperform because HCL Tech has been an outperformer in terms of growth rates for the last 2 years. And even next year, according to CLSA, it's likely that HCL Tech will outperform. But they also like the rest of the large cap IT pack. So they're bullish on TCS, Infi, HCL Tech, Wipro, and Tech Mahindra. On LTI Mindtree, they've upgraded the stock, but their rating stands at hold. And just to put on board, because this is a preview note, FY26 growth expectations, the guidance that they expect Infi to give is 2 to 5%, HCL Tech 3 to 5%. So that will give you an indication of the kind of year it's going to be, at least for large cap IT companies, low to mid-single digit kind of a revenue growth. But according to them, that's priced in after the recent underperformance.
Okay, all right. So that's an optimistic view coming in from CLSA on the IT space. Okay, I think we have Mayuresh Joshi now joining in. Yeah, okay, Mayuresh is with us. Good afternoon, Mayuresh. Good to have you on. So you're wearing the color, I think, of the season, right? The color is definitely turned green. I'm in the wrong color, but mine is more brown than red, to be fair. Let's actually start with this IT call that CLSA has made. The question is, if the market is bouncing back, then would you look at IT right now, considering that at least in the near term, FY26, those growth numbers are still looking, pretty muted at mid-single digit?
Afternoon, Surbi. No, absolutely. I think green is the color to go for, and always remain optimistic on that. But coming to IT specifically that you asked, I think looking at how Q3 numbers played out for the pack as a whole, what is probably happening with Accenture and Cognizant in the US, though a large part of the revenues, a significant part of the revenues are dependent in terms of US government contracts, and that is where I think the disappointment on both these stocks are coming through. We are traditionally outsourcers, and therefore I think the kind of work we are doing, specifically in AI, Gen AI, where there is, again, massive competition coming in from the Chinese counterparts as we speak. I think Q4 numbers are going to be defining for the sector as a whole. And therefore, our take is, with all that is happening from a macro perspective, what Trump does with tariffs on April 2nd, what happens with the corporate discretionary spending, because this is the quarter where corporates will largely decide what kind of spends they will go through. I think all this will get determined in terms of not just numbers, but the commentaries will hold key in terms of the forecasting that will be over the next 4 quarters. And therefore, I think our approach has been pretty simple. These stocks have underperformed. They're probably oversold and they're bouncing back as we speak today. But we will wait out for numbers, whether it's large cap or mid cap IT, see how management commentaries are playing out. And then probably pick and choose depending on how the commentaries have been. So largely, Surbi, to answer your question, sidelines as far as the IT sector is concerned.
Okay, so on the sidelines on IT, got that. Mahesh, we'll take a very, very quick break actually. Stay on, we'll have more questions for you. As we take this break, let's also leave you with some opinion that we got from Manishi Ray Chaudhary of MR Capital.
Earnings estimates have always been revised down, and that's partly because almost all the company commentaries that we have seen, they always tend to postpone their timeline for a recovery. Almost all of them, be it in consumer discretionaries or consumer staples or in industrials, they almost always have kept on saying that, okay, the recovery is on the horizon, but it'll possibly take a couple of quarters from now. So that recovery timeline is getting postponed. Every time we hear them, valuations have come down a bit, both large caps and mid and small caps, more so for the large caps. Frontline large cap banks, and our positive stance remains there. Earnings growth forecasts are in the range of early teens over there, but when you compare that to the valuations, which have come down drastically over the last couple of years, I think large cap frontline banks, they seem to be one of the best bets in India right now.
Look at that beautiful looking green map. I mean, it's an all green screen. Literally, almost every single sector on the Nifty tally is up and about. Strong gains, and obviously PSU banks leading from the front. Mayuresh, let's talk about PSUs really. What's your approach? And give us one or two specific names. I mean, stocks that you think can still be bought fresh now that the market momentum has resumed, and the ones where you would advise an exit. Basically, use the bounce to sell out. Maybe 2 or 3 specific examples there as well.
So, Surabhi, I think from BSU baskets, I think a select few banks and defense companies are probably looking reasonably placed as we see it in markets with India as per our ratings and rankings. And therefore, top of the rack, obviously State Bank of India. You've obviously seen decent numbers come through. The expectation largely is that even considering the base that they're operating out of, numbers should still be reasonable enough, both in terms of advances growth, in terms of keeping their cost to incomes in check. The kind of provisioning that they've probably done on their balance sheet is expected to cover a large part of not just their existing pool of assets, but along with that, the expectations in terms of lower restructured asset, lower slippages will probably mean asset quality check, and therefore return ratios should show significant amount of improvement with valuations and the early stage base that it is operating out of being very, very lucrative. So both from a valuation perspective and the base setting perspective, as we see it in markets with India, very, very appropriately placed. Out of the defense pack, obviously, I think they had got beaten down. Valuations were through the roof. But with the corrections that we've probably seen, valuations have become a lot more saner. The expectations in terms of a few select stocks, and within that particularly Mazda Dock is an example of what we've added in our global portfolios as well, as a clear disclaimer. I think the intention here is with the order book that they probably have, the revenue visibility in terms of the orders on hand seem to be significant enough. The margins at which all these orders have come and are getting executed are reasonable enough as well. And therefore, I think the kind of operating leverage with better execution that shipbuilders can probably deliver can be significant. Again, let's not forget the trigger. Europe is propping up its defense spends. The expectations from a macro perspective as far as the shipbuilding industry is concerned, almost 40% of the entire shipping fleet is more than 20 years old. So if you take that statistics, I think another 3-4 years down the line, a large part of these ships will either get scrapped or need to get refurbished in a significant manner, which means either repair work or fresh ships need to be probably built or commissioned. And therefore, I think these shipbuilders will probably remain in focus as far as the earnings pedigree is probably concerned. I think a few spaces within the PSU universe should be largely, I think, might be power, even though I think as a sector, we like the sector a lot. I think a few stocks within the spaces are still a little bit uncomfortable in terms of numbers. And therefore, I think within this space itself, I think you probably need to just ensure that you have the right stock in your portfolio. Because if you're probably having the wrong stock, you probably might be having stocks which are a little bit elevated. But apart from that, in my opinion, again, I think largely PSU stocks should do well. Generally, dividend yield is something which can be of a huge, huge value add as far as these stocks are concerned as well.
Mayuresh, what about Titan? Ending down with a cut of nearly about 3%. Ambit says that their channel checks seem to suggest that revenue growth momentum has slowed down in February and March on account of the sharp rise in gold prices. And you couple that with valuations expensive, 50 times. How do you feel about Titan?
Afternoon, everyone. Again, I think two things for the business construct as far as Titan is concerned, right? I think they're playing out in the traditional business where I think the studded component is a little bit lesser than its peers. And therefore, I think the margin profile that comes through for Titan is a little bit lesser compared to its peers as well. So I think obviously they're trying to restructure their overall portfolio gaps, including wedding jewelry, including the studded portfolio, which should start propping up the margins over the next few quarters as well. The second element, obviously, I think, as all of us are speaking on the street in terms of lab-grown diamonds, what kind of an effect does that have? Does Titan have a strategy in place? And if that strategy in place is going to be margin dilutive, I think is something to be seen as well. But if you probably look at the lab-grown diamond makers as well, I think they operate generally within a margin of 20-25%. So I think what's the strategy that Titan probably has in this peer of business is going to be extremely critical to note. And last but not the least, I think the way numbers have probably come out with gold prices at elevated levels, obviously the appetite in terms of how volume growth has been. And a large part of the wedding season is now behind us. So to that extent, again, what are the growth dynamics coming through in terms of sheer numbers and absolute numbers at will? I think that probably needs to be seen as well. So in our opinion, again, I think the ratings have come off quite significantly. The earnings have disappointed. The stock might actually underperform unless it starts showing some element of respite as far as the risk is.
Okay, all right. Hi, Mayuresh. Mayuresh, a quick word on BSE. The stock has come off the recent peak. I spoke to the management earlier today, and they said it's more like wait and watch mode. For the time being, they're holding on to their market share in the cash segment of around 7%. And on the derivative segment, they said interesting to see how things pan out from here on. What's your view? It's not particularly cheap even after the pullback.
Oh, absolutely not, Nigel. Afternoon to you as well. And again, I think we will wait and watch because I think there has been a significant amount of no valuation still not cheap. And there is a lot of news flow which is happening around expiries, around contracts, so on and so forth. And therefore, I think the ideal situation here is to wait and watch. Within the capital marketplace, our own sense is that the asset managers or asset management companies, whether they are wealth management companies or the pure AMC players, I think they are a little bit better placed. A large part of their asset pool is going to improve over the next few quarters. And therefore, I think with the kind of upfront loaded costs that have already been recognized on their balance sheet, I think anything incremental that probably comes through is going to be margin accretive and accretive from a yield perspective on their overall assets as well. So I think a few of the wealth managers and asset management companies, Nuvama Wealth as an example, or HDFC AMC is something that we've got.
Okay, all right, Mayuresh, we'll just quickly go through the final closing rates and then come back to you in Markets Forward. But what a day it's been. What a solid day. Not just days, right? And once again, I'll look out for the FPI numbers today to see if there's any evidence of a follow-through after over 7,000 crores of buying on Friday. 325 up on the Nifty. It's a solid move, and it's a move cutting across sectoral lines as well. PSU stocks moving higher, power stocks moving higher, IT, banks, financials. So let's look at the names. Kotak Mahindra Bank, almost 5%. NTPC, 4.5%. State Bank of India itself, almost 4% higher. Axis Bank, about 3% on the upside. Then you have some of the PSU names like Power Grid, BEL. These are stocks that have done quite well for themselves. There's buying on financials, HDFC Bank, SBI Life. Most of these stocks, Axis Bank, most of them up and about. Reliance, L&T, all contributing quite well. And today, you didn't even have too much of a complaint from the IT majors. Infosys just at the flat line. But names like HCL Tech, for instance, have done better, 2.5% on the higher side. The weakness was IndusInd Bank. Watch for the selling on this stock as the market's closing almost 3% down. And then there's, of course, Titan and Trent. They're weak hands today. But otherwise, Nigel, what a solid day.
Well, solid day. JBM Auto, that's the one that did well from the broader markets. Power Mech as well was up close to around 15%. Keep in mind, these stocks pulled back when the markets went a little bit jittery, and now they're fighting back. You have Kirloskar Pneumatic. Well, that stock was up more than 10% in today's trading session. IRDA, good move is what we are seeing. Centrum Electronics,